Hey, what's up, guys? Pakodot here. Um, my friend Colin and I started a podcast just to talk about things. Today, we talked about COVID-19 and its impact in the US economy and what we think about where the US economy is going to go in the near term. So, we talk about the virus itself, the unemployment rate, the $2 trillion stimulus bill, the potential bubble that the US economy might have been sitting on, and we also talk about what's going to happen from now. So, if you're interested in this topic, you're welcome to listen to our conversations. This video is divided into 5 different parts. There are shorter videos in the description below, as well as the full video. So please take a look. The disclosure is shown on the screen and the description below. And if you have any questions, send tweet at Pakodot for any questions or comments. All right, see you in a bit. So I want to start today with the notion that the US actually has the most case in the world for coronavirus infections, and it is the fastest growing also in the world. So that's bad news. A lot of cities are getting locked down, and you know the I think I think you should well people should not be taking this very lightly. It's actually a pretty serious pandemic we probably haven't seen in like 100 years. And so with this, the there's an economic impact to it, which we're gonna talk about now. But before we start, I do wanna show you this guy. It's okay to be smart on this channel titled "What This Chart Actually Means for COVID-19." He explains really well about the exponential growth of the virus and how flattening the curve, which means social distancing and not having parties, means for you or for the healthcare capacity that we have in the US. And any curve that is really above here, above this white line, which represents the capacity of healthcare, is any people who are in this curve is at a risk. So it's really important to keep that in mind and, you know, stay away from other people, even though you don't want to do that. It's really important. So we'll start from there to this. I think this is
Yeah,
like a super important topic we need to talk about. This
I'm glad.
data
I'm
point came
glad that
on.
you found this because that's what I was gonna be like, man, we were gonna have to talk about the weekly jobs item.
Yeah. This is, I mean, this is freaking devastating. This is terrible.
Yeah,
But,
like people, this came out today. People will like, so if you can't actually see this when you're looking at the screen that he's got there, like you see the chart, like look at the right side of the margin because you're not, it just looks like it's an outline to the chart. That
mhm.
line there, it goes straight up. Can you circle that? Can you circle
This
it?
one?
Yeah,
Yeah.
yeah, that's part of the chart.
That is the
It
part of
almost
the
doesn't
chart.
look like it. It
Yeah.
almost doesn't look like it.
It looks like
That
a
is where we're at.
right boundary or right axis of the plot, but it's not.
Yeah.
It's part of the
And
plot.
even you only have this going back to 2000, it looks like roughly.
Hmm.
Even if you go back further, because I was just looking at this, you take this back
Yeah.
50 years, and there's nothing like this.
There's
You take this
nothing
back to
like
the
this.
70s, and there's nothing that looks like this. And it makes sense. Like,
Hmm.
we just, based off of our need to curb the growth rate and the number of cases with coronavirus, all of those actions that put people in like self isolation and on lockdown in different states and different areas of the country, led to this. But
Hmm.
this is crazy. This is, it is an insane thing. Also,
Yeah.
to note today, in the last 3 days, the stock market has gone up So like those two things
Right.
are
Just to show
pretty,
you.
yeah,
It went up, what, 6% today? Yeah.
like
So past
yeah,
5 days, it's been rising.
they seem to be in conflict with one another. Like you wouldn't necessarily see the stock market go up, but the main reason why the stock market has been going up has been with the discussions in passage on a relief bill. So
Hmm.
the third installment of some form of relief passed by Congress uh, in just as many weeks.
Yeah.
So we are now into roughly the third week of coronavirus being like a real uh, action state, or like people taking action on it in the United States, uh,
Hmm.
regardless of what's been happening around the world. The World Health Organization has been telling countries to take action for a month or 2 months, back to when China was first seeing a ramp up in cases leading into the Chinese New Year. So like January into the first week of February.
Yeah.
So it's not like it hasn't been lots of warning bells about it, but yeah, we're seeing actions that have resulted directly to uh, a huge amount of jobs lost, and it's
Yeah.
only going to be worse.
Well,
So we'll,
in this article, it shows this is a great
ooh,
example right here in this article. It
yeah,
says weekly unemployment claims in Louisiana, and this spike here is comparable to the spike that we have now, and that's 2006 when Hurricane Katrina hit Louisiana, and so everything was, it's Category 5 hurricane. Everything was destroyed. The levee was broken. City of New Orleans was flooded. And so what you see right after that is this spike, huge spike in the number of unemployment. And unfortunately, we're seeing the same thing here. And this is astounding. Basically, the entire nation is under Hurricane Katrina right now.
with the only difference being natural disasters like hurricanes and earthquakes, they have a pretty finite point when they started, and a pretty finite point when all of the damage that could be done by that thing is done, and
Right.
then it's recovery.
Yep.
Like right now, we don't know what damage is, when the damage will be done. We don't know that. That goes back to those curves, right?
Hmm.
Of how many people will get sick, which you could hypothetically have 80% or more of the population and in like the United States get infected at some point in time,
Yep.
and then some portion of those people will be in severe condition during that sick, during the time that they're sick,
Hmm.
and a much smaller percentage of people will die from it.
Yeah.
And
Just
like
looking
the
at
main
this,
thing,
well, one
yeah,
of the easiest way to project it is with a complete lockdown in China. It still took them what is, I don't know how long this is, like 6 weeks of 1,000 or more cases daily, right?
yeah,
So even with complete lockdown, we're looking at that. So the U.S. having status like this is really sad too. But it's you just gotta we just gotta do basically what China has done to stop this thing as soon as
yeah.
possible.
And the saddest part about this, I would say, is in China. China's got kind of more of a authoritarian authoritarian state where
Regime,
they
right?
could just, yeah, regime where they could just force things to be done.
They do.
Uh, and here we obviously have a lot more freedoms, and people are more willing to just flaunt against certain laws or orders that are put in place.
Hmm.
So a lot of people still, and even now, still don't think that this is a serious thing,
Yep.
and they won't. But as it gets worse, and it's gonna get worse. Especially New York City is gonna be it's gonna get real bad. It's gonna
Hmm.
get real bad from what situations going on with Italy and Spain. The number of people that get sick and go to their hospitals and just aren't able to be seen. They have to triage, and there are just people that can't they can't uh, provide any care to, and they
Hmm.
just leave those people essentially to just try to outlast it themselves. People that are really critically sick and might even be in the age range that's the highest risk, and because they're more likely to die, they're just leaving those people to die and trying to focus on saving or providing care for the people that are more likely to survive. It's straight
Yeah.
up an overwhelmed system where you're triaging the best you can,
Hmm.
and that is going to happen even with what preparation has gone into it. Although all of the preparation in the United States has been like significantly delayed for a lot of different reasons, and there are
Yeah.
a lot of people who have highlighted a lot of those things that are really frustrating of delays to testing, delays to plans put in place for all states and all regions of the United States.
Yeah.
And New York City, because of its drastic increase and lack of intensive care unit type
Per
beds where they
capita.
can actually, yeah, where they can provide the right care, since this is like an acute respiratory, you know, targeted or centric virus.
Yeah. By the
They
way,
just don't have enough ways to treat people, and they don't have enough people to provide the care.
yeah.
The whole hospital systems personnel are getting overwhelmed, and they're getting sick themselves because they treat and care for so many people,
Yeah.
and they're having trouble finding more people to help take over when those people get sick. So it's like on the cusp of being significantly worse, and some people have said that it'll look like a third world country as far as the the carnage that'll take suit of how many people are there and are getting turned away or something like that because they
Hmm.
can't get cared for. The amount of deaths that'll occur at the same time,
Yeah.
and the amount of deaths that would be totally preventable for people who don't even necessarily have coronavirus, but like something else happens
Yeah.
and they need medical care and they're not going to get it.
They're
So
not gonna get it right. Yeah. Something that I heard also in the UK right now, there's such lack of testing that basically people who get tested are medical staffs. That's how bad it is in some of the countries, and these are like not a third world countries. These are the leading countries in the world. So this
yeah,
is totally I don't know. It was foreseen, but everyone is acting like it was unforeseen. So I don't know. Um, by the way, this article, more than 3 million Americans lost their job last week on New York Times, is actually really good article, and it's written by a professor from University of Michigan, actually, right there. Justin Wolfers. Yeah. So pretty cool. Um, just taking a little break there. So I actually want to talk about unemployment rate because what does that mean for the economy? Like we had historically low economy. That's what the president bragged about, right? Our economy is in the best shape ever, ever. So what does it mean to have such low unemployment rate? What's the good part of it and the bad part of it? Can we talk about that a little bit?
yeah. So unemployment rate is just a measure of seeing how many people are able to work and have income, so that way they can provide for themselves and spend back into the economy. It's just a measure of looking to see how well we're how well as a country we're using the our people
Mm-hmm.
in our society to contribute back into society, both providing providing services and fulfilling necessary roles, make the whole system work.
Right.
And
But
and
people do
so
say that zero zero unemployment rate is actually not the best thing for the economy.
right,
Yeah.
yeah. So if you were going to be fully employed, then like yeah, makes it sound like yeah, why wouldn't you want to have everybody employed? Everybody's happy, everybody has a job. But from a growth perspective,
Mm-hmm.
so this will come back. I'm sure we'll have to come back. I'm gonna want to come back to how we've basically created an economy.
Mm-hmm.
Uh, like this is globally, this is the modern economy. We've created an economy or an economic system that rewards businesses more than it really rewards workers uh, or it rewards people who produce things versus people who consume things. And that's because uh, in a system where you have some target amount of inflation, and that also plays into how this all works, you're just basically trying to make it so that way if you're producing things and you're an employer and you have equity, then you're always going to gain a little bit more. And then the person that wants to purchase those things will be kind of like losing out on value over
Mm-hmm.
time. Uh, and we'll talk about that more. There's lots of good videos that you could really look at
Okay.
just if you want to learn anything about inflation. You just start watching, 10 random videos about inflation and deflation,
Right.
what it means, and people have all sorts of things that they could tell you. And
Yeah.
that's really the best place to start because pretty much everything in the economy
Mm-hmm.
is linked to inflation. Like inflation dominates really all of the things, in my opinion, of what run the economy.
Yeah.
Uh,
So yeah, some all of these reference that we talk about, we'll just put it down in the description below. You can click the link on it later to learn more
yeah.
about it. Yeah. There's so many
So
useful videos nowadays, like in YouTube, on YouTube,
so just
everywhere.
like being a country that wants to have lots of businesses, since you've built an economy that's kind of pro business,
Hmm.
anyways. You want lots of businesses, and those businesses need to grow. Inflation allows those businesses to grow. And then as they're growing and they're producing more things, they need to have more, they're looking to add or hire in more workers to help them meet their new projections on demands for whatever it is their businesses.
Right.
So if you have a, a whole population fully employed, you run out of people that can be added into these growing businesses. So it
Hmm.
doesn't work. The whole thing falls apart. So you can't
Right.
go to zero unemployment. And
Hmm.
that's the thing. Like as much as wanting to have a heavily employed workforce,
Yeah.
uh, you you start losing out on how much you can grow. So at least in some sense. Now
Yeah.
you can increase efficiencies, and there's a lot of things that will replace workers like automation and stuff like that, and that's its own balance to find as far as keeping people employed uh, in the current structure of the economy and still finding more efficient ways to improve on things and processes like including automation uh, or different artificial intelligence type regimes that are able to do tasks that a person is like it's mundane tasks that they don't really want to do or don't need to do, and you can just have something that's automated to do it instead.
Yeah.
uh,
So another thing about just talking about numbers. So when the unemployment rate is near zero, and as you said, these companies need to hire more people to expand their company. What happens is actually who people who were not in the job market starts to enter the market also, and then things like this economy crash, or a recession occurs, that number looks actually even worse than what it was before, just in terms of numbers, because of the workforce has gotten larger and larger over time. And then when those people who originally didn't really work in the workforce, when they lose a job, like that gets counted too. So
Yes, a lot of that has to do with, that's a good point. So, like unemployment rate, it what is unemployment depends on how it's being defined. So, how
yeah.
we're counting who's employed and who's not employed, that definition has changed over time.
Hmm.
And even if you look at the president's comments, when he was running for election, he would cite numbers like, 20% of the population was unemployed, or he would say, unemployment's 20%. And he would just throw out ridiculous numbers that weren't anything what were being posted.
Right.
And then immediately after being elected,
Right.
he's saying, unemployment's great. It's continuing to get better. And like the numbers really weren't substantially changing. It's just the definition in his mind of what he was counting as unemployment was changing. And unemployment probably has been changed from how people are being counted. Like
Hmm.
if they've worked or were working, became unemployed, and then were still looking for a job, then like they're being counted. But maybe if they stop looking for a job, or it's been a long enough period of time, maybe greater than 12 months, they stop being counted as being unemployed. They just take those data points right out of the equation,
Yeah.
and they don't even worry about it anymore. So like unemployment, you have to look at how it's being defined, and so like who is actually being counted in unemployment, and then you can better understand what the real number is, given the certain situation. But yeah, you're right. People who weren't being included in the unemployment numbers
Uh-huh.
started getting employed. Maybe they were part time, maybe they were full time in new positions, and then you have an event like this where everybody everybody is told by their employers, "Hey, I don't have a job for you right now because
Yeah.
I can't operate a business.
Hmm.
Go to this site and sign up for unemployment, because that's what every governor is telling businesses in their state to go do right now based off of the effects." Oh
All
man.
right. We're going to start talking about stimulus bill
Oh boy.
that's about to pass and signed by the president. I mean, it passed the Senate yesterday, right? And then
Hmm.
it's in the House. I think it's expected to be signed tomorrow, which is Friday, 27th of March. And the president's gonna sign it, I think. um, so I mean, there are good parts and bad parts on this. What do you think about the measure that they're taking? I mean, this is really, I don't know if people do want to hear about us talking about this. We'll just talk about it probably for 5 minutes or so, and then we'll
Yeah.
really dive into the investment part of it, which is the key of this video.
All right.
So,
This
so this,
bill,
I mean, this caused the the like euphoria in the market in the past 3 days, right? This is the reason why it bounced up almost 20%, I think, from the trough. So,
yeah, that's what I would imagine, and that's what I'm sure a lot of people who started to get back into the market investing also probably were going off of the interest in this bill being passed, or likely coming up to be passed and
mhm.
signed into law. Uh, we just have to talk about the size of this, like the sheer magnitude. If you were to go back 15 years and talk about how, so we're post 9/11 terrorist attacks. We're in an environment where people are still dealing with kind of the scars and some of the economic repercussions of the dot-com bubble. which in all seriousness really wasn't that bad.
Hmm.
like after what we've seen since, and when you compare it to other recessions
Yeah.
and difficult times for the United States, like it was a little blip, not
Hmm.
really that bad in comparison, all
Yeah.
things considered. But if you were going to talk about certain bills that would have any kind of price tag, and this is just for anything, it, for the government to be able to pass, and it would have a price tag with it. The budgets and the budget deficit in the 2000s
Hmm.
were like tiny compared to what it is today. So
Very tiny.
the fact that that we're making this stimulus package that is of this size is very significant, because and how quickly it's passed through. So really, even going through multiple iterations to
Mm.
get to this final bipartisan bill that's moving forward.
Right.
Uh, like it's pretty crazy, because
Yeah.
from a you know balancing a uh, balancing a budget on a personal level, like a personal finance level, like
This
this
is
is like
you owe you you basically, so if you make $100,000 a year and you already owe $100,000 right now to somebody, right? And you're about to lend, like 10,000 more of that. That's basically what's happening. And
yeah.
just to talk about the size, the bailout in 2008 of the banks and companies was $700 billion. It's huge. This one is
and
$2 trillion. So
and that
respect
700
to
million dollars,
yeah.
that made a lot of lawmakers and Americans just interested in what was going on by their government in the depths of the 2008 financial crisis.
Hmm.
That made a lot of people lose sleep. That was 700 billion, and
Right.
this is almost three times that.
Yeah.
And this is just the third relief bill for coronavirus that has happened. There were other ones that didn't really have
Oh, that's right.
significant price tags associated with it, and
Hmm.
this won't be the last. There will be more
There will be more.
that will follow on this, based off
Yeah.
of the continued you know
Yeah.
the
If
continued pressure on the economy that's gonna result from having everything locked down for so long.
Yeah, if you look at it in absolute value, yes, it is almost three times, but relative to the GDP of the US, it's a little bit more than twice the
Right.
size.
Not as bad, since our economy has grown since then, but
Exactly. Yeah, but this is still huge, huge. So, I mean, I don't know. Do you want to take a look at the aspects that would actually have really positive effects versus negative? I don't know if we need to talk about that at all.
I'm sure that we'll have time to
Cover
go
this
go
later.
down this go down this later. Yeah,
But I mean, we can
this
talk
bill
about it
will.
now, and then we can just really, show it to people later. I don't know.
Yeah, yeah, sure,
Since
sure.
we're talking about it,
All right.
I I personally think that it was amazing to hand this money to people directly, to have trickle up instead of trickle down, which 2008 bill was completely trickle down. That's how the bill was passed. There was no oversight, and supposedly a lot of CEOs and higher ups got their bonuses got paid off while all the economic crash was happening. But this one has a lot, I think, has a lot more measure to monitor those things, make sure the money's going to the right people. And plus, most adults would get $1,200 um, per person, and if you have a child, you get additional $500. So that gives the American people and non-Americans, I think too, if you're a taxpayer, get a little bit of cushion even if you didn't have any savings. And those are the people that actually spends money and gets the economy going. So I think that part of the bill is awesome.
Yeah, yeah, that's good. And like for all of the terms that are used just when looking at anything to do with the economy. So trickle up and trickle down are terms that people have used now for what feels like at least the last decade.
Hmm.
And if anybody's not sure what that actually means, then all it is just where the money goes. Is it going to go to the lowest level in the economy? So like right into the pockets of you know the workers and regular people in the country
Yep.
that are then going to go out and use that money to support themselves and spend it on anything. So
Hmm.
really, it benefits all potential you know industries pretty much evenly, with the dollar being the vote from the person that's spending it. So it's like the most blend of capital stimulus and democratic structure of support in an economy when you're trying to inject some kind of stimulation, some stimulus into the economy. It's
Yeah.
probably the most even way where you're not picking winners and losers. Whereas
Right.
trickle down uh, is something else that has been, talked about for a long period of time. I feel like going back to like Ronald Reagan era,
Yep.
which is provide a lot of monetary incentive or benefit to the highest level in the economy. So like businesses, because they're going to hopefully with any kind of benefit that they're going to receive in terms of money in their business, either by reducing taxes that they have to pay, providing them some other incentives, or
Hmm.
like in this case, we're kind of looking at loans, like loans that are very favorable in terms of rates and just preventing a business from going bankrupt, but some amount of money injected into a business, and the incentive is, or like the hope is that that business is then going to try to continue to grow,
Right.
like we had talked about earlier, hire new people,
Right.
pay their people more money. But does a business typically want to pay people more money? Like businesses have margins, they have ways that they're looking to create a monetary edge and maintain that monetary edge. In some cases, uh, they look to hire more people and pay more money to retain, talent in their industry. But in some cases, they're just looking to, you know, fatten up the the revenue stream and the profit stream that the company has, and not necessarily have that value returned to the workforce. Maybe it's returned to the shareholders, but that the shareholders only benefit if they're you know well off enough to be able to buy some stake in the company. So like it is very targeted in who benefits
Yeah.
when it's trickled down, and it's very
Right.
top heavy. It usually only benefits or massively benefits those who have money.
Those who
So
have money, those who have invested in the
yeah,
company.
so it is a income inequality gap widener. It just helps to typically spread that out.
Yeah.
And like actually, if you could uh, pull up like a graph of the last 100 years of wealth inequality in the United States, because this is actually pretty useful when like looking at this.
Yeah.
Income and wealth has separated starting at the time that we really started using supply side economics, which
Hmm.
is the same as the trickle down economics. Supply being, you know, those people who produce things, the owners of businesses, uh, employers. So all of those people benefit with a trickle down. money being injected into their uh, spot on the economic hierarchy, and then whatever benefits that they look to provide from there
Mm-hmm.
trickle down to everybody else if
Yeah.
they choose so.
So what do you think about these unemployment benefits in the bill? Is there any comment? Do you have any comment on it?
Well, yeah, we just we just stopped the majority of America from going to work, and it
Right.
wasn't anything that was in their control. So
Mm-hmm.
I think it's good that we're not just gonna let everybody fend for themselves while
Right.
they're being told to stay self-isolated.
Yeah.
I mean, this is essentially, it was big government that made these choices, and ultimately, and we'll find out, based off of how the virus's impact on health of the nation is going to be. And we're going to see the amount of people that get sick and the amount of people that die go up,
Mm-hmm.
and it'll probably lose a lot of skeptics based off of the numbers of people and the impact on families and communities that's going to have. And then the question's going to be, was it? I mean, and it's the question's already been asked, and we're 2 weeks into this.
Mm-hmm.
Is it the right decision to to shutter the economy in the way that we have? And those answers will be more clear at the end of this, but
At
it's
the
not
end
going
of
to
it.
come without a lot of pain. And
Yeah.
that's why the stimulus bill uh, is a means to address some of the issues uh, of that decision to shutter the economy by having people prevent the spread of this virus. So a lot of people have to realize, and they might not be willing to, or they have different views on the matter because it's impacting everybody
Mm-hmm.
adversely and differently. But there was no. This is a no-win scenario. There was never an outcome that that anyone came out of ahead. Uh, this is a scenario that we're placed in where everybody is a loser in some
Yeah.
fashion. Like, this isn't what anybody wanted. Everybody loses, and as a result, we're we're gonna have to take a lot of steps together to figure out how to recover from this.
Mm-hmm.
But and this bill, which was passed, I think 96-0 on a vote in the Senate.
Was it
I
really?
don't.
Wow.
Yeah, I didn't see what the House vote was on it,
It's
but
tomorrow.
it's one of those things where it's not until tomorrow. So
Yeah.
it's one of those things where it's extremely important as a step in a direction to start dealing with some of the issues uh, that are that have materialized as a result of actions taken for you called it like a once in 100 years, or
Mm-hmm.
it's a once in a generation type you know disease or a virus,
Virus.
and
Yeah.
or just situation to
It's
deal
a
with.
it's a war against the virus.
Yeah, it
Yeah.
is. It is, and the hospital system, medical personnel in the United States are essentially being put into a position where it is wartime for them.
Yep.
Like, you have people that are being recruited by different hot spots that are significantly affected right now to, like, by any means to come and help, and they're trying to put as many protections in place to make it so that way they can have people uh, be able to care for the people that are getting sick, and they're doing anything they can to get the equipment and the personnel to the places that they need.
Mm-hmm.
It is a mobilization effort that is very warlike,
Yeah. So
and for good reason, because if not, then there's going to be worse uh, worse repercussions
yeah. By the
by not
way, if
investing.
there are listeners who are doctors and nurses and emergency responders, I think there are a lot of benefits right now that you can get. Um, I know you're like super tired after work. But like something like Uber Eats, I think they're doing free delivery for these people, and like Starbucks in the morning, you can get free coffee. So like take advantage of that for sure. And thanks
Yeah,
for
definitely.
working hard. It's we really need you guys. Um, so should we talk about this now? This decline of stock market. Um, how should we start this? What should we start to talk about? I mean, this chart.
just keep
Look at
just
this
keep
chart.
zooming out.
Yeah.
Just keep zooming out. Just keep going.
S&P 9-year historical chart right here. We're gonna show recessions, get out of log scale, inflation adjusted. What year do you want to see it from? 2000?
Yeah, that's fine.
1990?
So we can obviously we put a lot of emphasis on this in our own lives,
Yes.
uh,
Um,
but the stock market isn't. It really it represents what's going on in an economy, but it is not. It's not the best representative of the health and strength of an economy, and it has a life of its own. So a
yeah.
lot of people do realize that. Uh, so
Just
giving
as you're just as like American life quality is not represented by the GDP. Like it's
right, yeah,
similar
GDP
cancer.
is really a it's a I think it's a bad representative of the the growth of an economy because it's changed so drastically. You know what is included in GDP has changed so drastically, and how we inject money into an economy that creates growth that not necessarily was something that was healthy or available in previous eras. So
Hmm.
like it's GDP is kind of a tough metric to go by reliably in the modern economy that we have now.
Right. So this was the bubble.com decrease, and I think this was what, two quarter, maybe a quarter recession.
Hmm.
In the financial crisis caused by the housing subprime mortgage market. Also had, wow, that's long, 2007 to 2009. So almost a year and a half recession there.
Yeah,
Um, and now we have this downslope. I think today Jerome Powell, um, the Fed chair, said that we are basically in recession. You might as well call it recession. I think that's what he said. So,
right.
I mean, look at this chart. Inflation adjusted, right? So actually, bubble.com peak was higher with inflation adjusted than the 2007 2008 peak.
Right.
But so in the Obama era, with a huge $700 billion stimulus package, I mean things were heading up and up and up and up, and it seemed like there was no ending. And then this starting from like 2015, it flattened out until the election. So for 11 months, it basically flattened out. And I actually
Hmm.
personally thought that this was it. This is the black swan might be coming.
Yeah.
And then
We had talked about that a
yeah,
lot back then.
yeah,
2015, and we were like, man, we had seen how far it had gone up, went up above where it was at
hmm,
from the height of the 2008 financial crisis. It still seemed like, and we were just going off of the length and duration of the run, and how
exactly.
when you look at that, it, kind of peaks a little bit in 2011 and then dips down a little bit. Uh, and then it's just like straight up from there.
Yeah.
You see that? Yeah.
Yes.
So like there was a lot of worry
Right
leading up
here.
to 2010 and 11 that it was a fake recovery. A
Hmm.
lot of people were worried that it was a fake recovery. Like it's not represented in this graph, but a lot of other uh, asset prices and stuff show that people were worried. So 2008 was the housing bubble. The housing bubble didn't bottom until 2011 or
Yeah.
2010, 2011 timeframe. So
Yeah.
even though the recovery in the stock market was well on its way, housing bubble bottomed there.
What?
And when you see the price of houses start going up, that's where I would say people started to have confidence again in the overall recovery of the economy. They didn't think that would it was a fake recovery anymore.
Right.
And also you see from like the safe haven type assets,
Hmm.
like you see gold and
Gold and silver.
silver,
Right. You can see it.
they peak in 2011, I think,
Yeah. Let me see.
and then they start trending down. So that's you had 2 years post bottoming of the
Look at
stock
that.
market price.
2011, 2012. You had it right on the
Yeah,
spot. Yep.
yeah,
It peaked right there. So people still didn't believe that the economy was back. And in fact, this drop right here looks small. It's not. That's almost like a 20% drop right there in
yeah.
2011.
It's a pretty big drop.
So they didn't actually. You're right. Until the house prices hit the bottom and saw that comeback. Until then, yeah, you're right. It took a long time.
Yeah, so we're going to go through a similar thing. I think it's going to be a while before like it's hard to project when confidence returns,
Hmm.
but you don't get a healthy economy and a real recovery in everything, not just maybe the stock price, stock market rebounding until confidence returns
Yeah. Well,
in all aspects of the economy. So,
yeah.
and
So
that's going to be a tall order given where we're at right now.
so we're
And
yeah, we're
right,
gonna have to make an argument right here. I mean, in the beginning of this, when we I think had right here at the peak. Well, I guess we should talk about Trump era before we go to where we are now. Um, so 2016, I actually thought that the market was already, you know, there was some bubble into it. There's possibly
mm,
another crash coming. And then November of 2015, was it? It's 16, 15. Wait, 16, right?
60.
Yeah. Um, Trump gets elected, and you can actually see that the curve just starts to rise from there again
Mm,
instead of dropping. And you know, it's actually I underestimated how many tools there were available to actually boom the economy even farther than where it was. Um, and I learned that lesson from Donald Trump is there 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 are a lot of things you can do to
yeah.
expand economy.
Yeah, so that really brings us to like that was it was that like 2 year stretch, 2015, 2016, where me and you started like really throwing up our hands and being like, we have no idea how anything works in the economy now. Like this was not what we expected. We expected we were getting close to, a hot economy that was gonna hit some kind of peak
Hmm.
and, was gonna go on a decline and we were gonna enter in a recession at any point in time. We were basing that off of nothing. Like we were just like, it seems like it's time. The stock prices are high.
Yeah.
We had no idea. So like that's
P&E
where
was high. Yeah.
yeah,
Yeah.
that so we didn't realize what things were available to still, even if it was in a sense kind of manufacturing uh, more favorable conditions for businesses to operate and produce healthy, uh, continued operations and lower price to earnings ratios. So like, more earnings coming in. You have like tax cuts that are part of that, just more favorable business environment. Uh, Donald Trump removing regulations, obviously, that is one of his
Regulation is
favorite things
huge.
to do. That allows more flexibility for a lot of businesses to do certain things that will aid them in their quest for
Yeah.
profits.
And a
Uh,
huge tax cut.
right.
Yeah.
Yeah. Definitely.
Yeah.
Again, tax cuts for corporations being that trickle down kind of supply side style economics, and they were like, we're going to do this. It's going to be a huge boon for the economy and for everybody. And yeah, it was like a lot of people were better off, and more people were employed. But to a point, we did that, removing a lot of the things that would protect us in a
Situation like
downward
this.
trending economy, a situation exactly like this.
Yeah.
We removed we removed a lot of the normal uh, tools that the country had to limit the downside and the difficulties that some kind of recession would provide.
Hmm.
And now, we've had a prick of the bubble that we were kind of living in,
Yeah.
and
Huge bubble.
that's why we have this enormous stimulus package, because we ran out of options of normal
Well,
tools that we were using to
yeah.
to manage the economy.
Well, yeah. Looking back, I mean, he got elected right here in 2016 October.
Yeah,
People knew that regulations and EPA is going to disappear, basically, the Environmental Protection Agency. Regulation is going to go down easy. Companies are going to do more things more freely, um, and expand larger. And then I think the tax TGCA, what is that? Um, the job, the Tax Cut Job Act or something like that. Was it?
yeah,
Yeah,
that sounds right.
yeah. That has passed in 2017, and then it boosted boosted corporations, large corporations, even more. And then here we, like, you struggle a little bit. You see another flat curve, basically right around 3,000 for about a couple years, and then Fed, out of nowhere, started cutting rate when it's at the peak of the economy. So that's the blast boost right here. That's all the gains that I didn't see in my portfolio because I didn't think that was gonna happen. Um, but it happened, and then you know the downplayed coronavirus um, hit China, and then rest of the Asia, and then Europe, and then now it's in the U.S. and we see the curve
Yeah,
go
and
down.
a lot of these gains that you're showing post Trump election, like a lot of those gains were just more confidence in the system, right? A lot of people were more willing to go out and buy, purchase things in the stock market, and that no, that's just stock market valuation that's going up, right? That we're not
Right.
looking at price to earnings, we're not looking at anything else. We're just looking at pure value of the stock market. A lot of that was just people buying into it because of them being confident of the changes that were going to be made, and then of the changes that were made, continued confidence. But then you run out of that. You get a lot of overvaluing of different things in the stock market, and that's where we were at
Hmm.
as well. And then
So at the what is this? It's February. So this was probably the peak of this like the coronavirus peak in China was probably around this time, I think. And then
yeah,
people
yeah,
did realize that, you know what? A lot of things that are coming in from China is not coming in, and then the market reacted right here. This probably the beginning of when Korea got hit. So,
Yeah, that's actually the best way to look at the start of that.
mhm,
When you're a business owner and you your business operates with material that's coming in some way, it's your supply chain's being affected by what was going on in China. You had very early warning as the person that's in business. Again, this ends up being somebody who's in a position that's benefiting from those the way that the economy is structured. They're
mhm,
already in a position where they're making money as a business owner. Then you get they're the ones that typically get first wind of things that are going on, and then they start looking into it more. And those are the types of people that were starting to raise, position themselves, raise cash, and trim positions, get out of certain equities, to prepare for, you know, something that was going to happen. It started off as just a supply chain disruption,
right,
because what is it? I think it's almost a third of, like, material and parts for worldwide manufacturing production of like all goods comes from China.
yeah,
Like it's a ridiculous percentage of what essentially, and that's not too crazy for a lot of people because so many things are made in China,
mhm,
or so many things, the base materials end up getting at some point in time crafted or processed in China. But that froze the whole supply chain for like a ton of companies that way,
right,
uh, at that time frame. And you see people recognizing that and starting to adjust for it accordingly, not
mhm,
really thinking that it was going to be a pandemic virus related thing that was going to impact the world as it has so far. They were
yeah,
just realizing business was going to be bad. They start positioning themselves, and you see that first drop from the all-time highs late February,
right here,
uh,
mhm,
yeah, down to,
right here,
the first dip, yeah, end of February, beginning of March,
mhm,
and then you see a rebound, kind of like you do for, you know any anything. I guess anytime the market does anything, you're gonna see some kind of reaction and a rebound a lot of times,
because
and then
it's
when
it
that
always has
enthusiasm,
the overshoot and the undershoot, right?
right,
Called momentum.
and a lot of it's just people trying to process the information. So many people have been hearing for so long. We just looked at the chart of the S&P for the last 15 years,
Mhm,
or the last 20 years. So many people have heard this, buy the dip mantra, and with the next time that there's a big decline, that's the time to get in.
yeah,
uh, so many people have had that so ingrained in them for
mhm,
the last 10-year bull run, that of course you're going to see a rebound at pretty much any low that's tested.
yep,
You're going to see people buy.
yep,
Either they're buying because of, oh, now is the time to get in, or they're buying incrementally because they have capital to deploy. And then you start to see real moves to, curb the growth of, or the growth curve in the spread of the coronavirus
yeah,
once it's starting to spread in the United States in the first week of March.
yeah. During times like
Then,
this,
yeah,
if you actually don't see a chart that we just saw of like over 30 years or something like that, any bounce up or down is gonna be like around five, like 3 to 5, no, like 3 to 10% maybe even. So like that 10% rebound, you're just like, what is going on? Is it actually just gonna make the V shape and go back right up? Like, you know, there are a lot of second doubts that you can make during this time, and especially with this rebound in the past 3 days. I mean, this is huge. I think it went up like 20% almost from the trough here to the peak today, the little peak. So, you know, you could, I guess, imagine that this curve would just go right back up to 3,300.
Yeah, I mean, you
But
just have to
but you have to look at the
you just have to have a
fundamentals, right?
long
You
well
can't just look at the chart
fund
like that.
you can't base anything really off of what's going on with the chart. And in cases like right now, you can't necessarily base what's gonna happen based going off of the fundamentals of any company
Mhm.
because you don't know what the fundamentals are going to be for that company in the next month or the next 2 months or
Yeah.
the next 2 quarters. Nobody does. Right now, we're in a weird situation where you really there are gonna be a lot of people that are gonna be wrong when they enter the market. Uh, there's just no way around it.
Yep.
People who people have already entered in thinking that it reached its lowest point, and maybe they entered in on this decline down to the lowest point that we had so far,
Mhm.
right? And there's people that are going to speculate that this is the start of the real rebound.
Wait, hold on, hold on, hold on.
There's
Hold on, hold on, hold
lots
on.
more people that has the exact same number.
You just cut out. Uh like can you say that again?
Oh man, where
Yeah.
did I cut out at?
You
That's
said
no
you
good.
said you're at the bottom and you could have purchased, some stocks at the trough of this chart here.
I don't think I said anything like that.
Oh,
No, I said, I said, there's while this is all going on,
okay.
I started. You had mentioned fundamentals.
Yeah,
Is now the time
fundamentals.
to is now the time to base this on the charts or fundamentals. Fundamentals would be great if you knew what they were gonna be. You have what has happened in the past for a certain company as far as what revenues that they had, what their business model was doing, how strong their balance sheet was going into this.
Mhm.
Really, the only thing that can you see with the amount of cash that they have and what assets that they have, and if they're able to liquidate enough things to survive whatever's coming,
Right.
or if they have credit, lines of credit that they can draw down on. Uh, do they still have revenues? Do they do they still have a way to survive? That's the only thing that you can
Right.
somewhat measure, but
And
nobody has any idea because it's pure speculation on how long certain shutdown, lockdown type aspects of this of combating coronavirus is going to
right.
go on.
Right.
And that's why I keep on saying this is only the third stimulus bill third bill for relief that has come out for coronavirus, and it is likely the first major stimulus bill, and it probably won't be the last stimulus
Yeah.
that gets injected to deal with a lot of these things. And you don't know what's going to happen with any company, I would
Any
say.
company, yep.
And so it's difficult. But if you
Mhm.
are going to buy anything, and you can still buy at periodic intervals, you can buy some of the S&P or broad indexes, index funds
Mhm.
of what the stock market is, or you can buy what were the high quality blue chip stocks that are down, and stocks that have lots of cash on their balance sheets. Those are all good, smart purchases. What you don't want to do is be looking at something and be like, oh man, this stock dropped 80%. And, if it recovers 20%, or if it goes, it can double if it just goes back up to what a
Mhm.
portion of what it was. That's probably not the best idea. You don't want to
No,
be doing that.
you don't want to be
Plus,
doing that.
you're working on timing everything.
Yeah.
If you have
It
any
it
time and
base
playing with the market, you realize that you're always going to lose when you
yeah,
try to time it.
right. It basically also, eliminates all the point of what's called investment. All the 1 day, couple hour, you know, 5 day short term investments. It's it's really just flip a coin and see what happens type of deal.
Right. That you're no longer an investor.
No,
Uh, you are a speculator, and that
exactly.
is an investor looks to buy into a business that they want to be a part of and contribute to or profit from for a long period of time.
Yeah,
And they're not looking off of momentum or not looking to make a quick buck in a turnaround.
yeah.
They're looking to generate long-term value uh, for themselves.
Yeah, just
That's the difference.
for information for the listeners, I guess dollar cost averaging is what Colin was talking about, where you have some amount of capital, no one can foresee what's going to happen. You just chop it up, invest invest it into something um, periodically, basically, in a time like
And
this.
that's in a normal situation where you don't know what's going to happen. I'm
Right.
telling you that this isn't a normal situation, but nobody can tell you what's going to happen. So maybe it's not a bad idea to still buy just a little bit, just a little nibble
Mm-hmm.
of things that you're interested in.
Right.
But by no means, don't think that you'll just buy things for the next 2 months and then expend all of your capital, that you have available. You want to preserve as much capital as you can
Yeah.
because you don't know what's going to happen, and it is very likely, in my opinion, that we'll retest the low that was already made and we'll go lower because there there's only so much that you can price into a stock market as far as what's going to happen. And when nobody knows what's going to happen, it creates a lot of opportunities, but it also creates a lot of opportunities to make a bad decision. So just try to protect yourself by not
Yeah.
don't buy all in at one point. Don't try to time anything.
Well, what do you say to
Preserve cash.
people who already had on the stock and your 401k, you were in the stocks. It already hit the peak. You were happy about it, but it all came down, and you missed your timing to sell. What do you tell? What's the best strategy for those people? Just
So
hang on to it, and just collect savings again.
you have a couple options, and a lot of that depends on what your time horizon is to access that money. So
Hmm.
if it was a retirement account and you're 25 years old, uh, there's probably no reason to do anything
Anything,
with it.
right?
Uh, if anything, and again, this would be the same as if we were still on the upslope. You can trim some positions to open up a little bit of cash, um, but you don't want to make 100% decision, sell all, liquidate everything.
Right.
Also, any positions that you liquidate, it's going to come with some consequences because the funds that your money might be in, especially if it's some index funds or specialized target date funds, they might already have be severely depressed because of people trying to liquidate them in that retirement account,
Hmm.
which has its own negative price pressure. So when you go to switch it and they have to sell it, they have to find a buyer that's willing to purchase it at that price, and then maybe it gets sold at an even lower value
Yeah.
than what you were hoping for. So in some cases, it's best to just leave it. Now you're 30 years away from retirement. It's in a retirement account that you won't be able to use unless some new legislation comes out that you can use it uh, as a coronavirus relief item.
Hmm.
A hardship that will likely qualify, but it doesn't currently qualify. Uh,
Yeah.
but the smartest thing to do is leave your money in it unless it's like a dire emergency, can to not make a decision where you just sell everything or buy everything all at one point. You can make incremental decisions if you feel like you want to have some more control over the situation. But
Yeah.
again, you're probably not going to time it any better. You'll probably always miss your timing.
Yeah. So
There might be days delay in buying and selling, and when there's such increased volatility where the market can go up and down 10% if you make a decision to sell or to buy
mhm.
in a retirement account, and it takes 2 days to process that decision, the
Right.
market could be doing something completely different. So it's
Yeah.
probably best to sit tight.
Yeah. Another so before pre COVID-19 in the US, actually both of us thought that the market was had some sort of bubble. Um, and when this coronavirus came, impacted China, Asia, Europe, and then the US, people were saying this, hey, this drop is just a short-term short-term deal. It's gonna have a V-shaped recovery curve where it hit like in 2018 where it went down 15% and came right back up 15% in a span of like 2 to 3 months. Is that gonna
Mm-hmm.
happen again, or was it actually sitting on top of a bubble and the bubble popped and this is just gonna continue the decline from this point?
Yeah, I think it's going to be the latter of those two.
Right.
I think that had developed an enormous everything bubble, and that term's been thrown out by a lot of different people, I'm sure, for a long period of time.
Hmm.
Uh, a bubble that was created in basically all asset classes over the period starting post 2008 financial crisis, where the interest, the federal funds rate was set, lowered all the way to zero and held there
Zero
essentially for
for 7 years.
decade.
Decade. Yeah,
Yeah,
decade.
it felt like a decade
Yeah.
if it wasn't. And that's just that just creates a very easy way to acquire money with a very low cost on that money. So being able to loan out money, acquire it, buy different things, and prop up. You can use that money to go spend whatever. Dump it into any kind of asset class. So you just see asset classes rising up.
Hmm. Yeah, basically 2009 to 2015.
Yeah,
Long
yeah.
time.
So it's we essentially, instead of having uh, real inflation calculated by the consumer price index, so like the inflation that you see on your general products in the economy, instead of seeing inflation there, you saw inflation in all sorts of assets. That
Yeah.
money that was being put into the economy in the form of quantitative easing in that post 2008 era made its way to assets,
Can we talk about,
houses, stocks.
yeah, can we talk about the SPY ETF trust funds real quick? What could potentially put the market in bubble because of this right here?
Because of
Because
what?
we've talked about this, how the index funds, which
Mm,
are trying to mimic what S&P index is doing, right?
right. So ETFs
Let's talk
in
about
general,
this. Yeah,
yeah,
ET.
passive investing vehicles.
Mhm.
So in the last decade, almost everybody's recommended, because you can't time the market and you can't beat the market. So I keep saying that you or we aren't going to, don't try to time the market, don't try to buy something unless you do a lot of research and have very good handle on what's going on in a specific industry, in a specific company, and macroeconomic changes, then sure, you can definitely beat the market, and that's
Yes.
exactly what a lot of people who lead hedge funds that are very successful at leading, they're very good at doing that. They
Mm-hmm.
find some aspect of the market that has some disparity that they can make a bet on that will generate money for their fund. So it's absolutely true. Uh, you know, everybody looks to try to do that, but it's usually the novice investors, the retail investors that just start to generate some income in their first jobs and think that they're smart enough to take on the market. They usually fail, and
They
then
usually
maybe
fail.
start to start to get you know get a little savvy about it, and maybe you have a better chance later on. But
What?
the thing
Let,
that everybody is told to do is put your money into an ETF that
mm-hmm.
mimics an index of the stock market, uh, and then you can't go wrong. Like
Right.
you're going to make whatever gains the stock market has, and you're not betting on any specific thing. But the only problem being the stock market doesn't have all winners. You have winners that pretty much outweigh the gains of the
Well,
losers that
wait,
make the
hold on.
rise, and you have a lot of losers.
Yeah. So the stock market. Well, first of all, why would people not save and wanting to invest into something? That's because that's because of what we just talked about, right? Because of the interest rate. The interest rate is near zero. There's no pointing in saving unless you just want to hang on to your cash because with inflation rate being, you know, 1 to 2% every year, you're actually losing the value of the money by just having the cash under your mattress, right? You want to put it somewhere where it could grow. Uh, and a lot of investors suggested this idea of just investing into an ETF that follows the S&P index. And if things grow, if things the companies that are in S&P 500 grows, then you also gain money at a much faster rate than the savings account. So that was the whole idea. And people actually, like working individuals and novice investors who didn't have enough time to research and lost money in individual stocks, this was the easiest deal there ever was, to just put it in this ETF and see your money grow slowly and forever, it seemed, right?
Yeah, yeah, absolutely. That
So
was a
let's talk about the losers and the winners of this S&P 500 index and what this ETF trust fund is doing to them to potentially put the bubble in the market. We've
yeah.
talked
So
about this before.
yeah, the S&P 500 is just a huge index of 500 companies that have been chosen to be part of it,
Mm-hmm.
uh, and it mimics the price of those 500, the value of those 500 companies.
Yep.
And not all of those companies are going to be doing great every quarter or every month of every year. So some companies are doing well, and other companies are maybe lagging behind. There's seasonal pressures, there's cyclical things going on in their specific industry that causes them to have a bad year for whatever reason. But in general, they'll rise over time. They're a business that's productive, it recovers well, and it contributes to this index. Uh, and some companies are just crushing it year after year for
Yeah.
many years in a row. So when you have ETFs that track these companies, they, in order to essentially mimic whatever the total index is doing, they purchase shares of that of these companies. And so every time somebody purchases into an ETF, then all of the companies that are part of that part of the underlying index
Yeah.
are going to have shares purchased. So even if it's an underperforming company that's still included in this index,
Hmm.
it's getting its shares purchased because it's part of the growing popularity ETF that's mimicking it.
Yeah.
And so demand for those shares is increasing, and it allows the share price to appreciate just because from a number of buyers to number of sellers, more buyers are showing up in the form of ETFs purchasing the shares of that company. It causes its share price to go up, even if the company is less good,
Yeah.
and that gets represented in the overall price to earnings of the S&P. So you'll see certain companies that start lagging the average of the S&P because their share price is appreciating, even though their earnings isn't really trending up. Uh,
Yeah.
and you've seen that exacerbated a little bit more in the last couple of years as we've kind of flirted with higher PE ratios for a lot of companies based off of enthusiasm and ETFs purchasing and keeping demand high for their shares. And then you also have companies that use low price debt like that they can acquire to fund mergers and acquisitions and different like they can invest into their business and they can buy back shares, which lowers the number of shares
Hmm.
that are that are out standing, and then that lowers the raises the share price by lowering the number of shares available.
Yeah. So I guess like as an example, we can look at this these two companies right here. 5 years. Boom. 5 years. Boom. We just found these I mean this is list of S&P 500 stocks. What ETF
Oh,
does
that's
is
yeah. You just go down the list, yeah.
yeah, what if ETF does is it's a pool of fund and you just invest into all these different companies, not necessarily 500, but maybe 50 that represents the 500, right? And
Right,
you
right.
purchase all those companies stocks with people's money that was pooled together. And so if you see Microsoft, um, this is the past 5 years. It's insane. And this is 3M. Okay, so if you look at it from like 2018 and Microsoft from 2018, Microsoft actually to the peak gained about twice of its value, of the company value, right? Whereas 3M is halved its value from the peak. So
Mm-hmm.
if you're averaging these two companies as 50-50 asset, the index is probably, flat or maybe slightly rising, right? But if you're buying the ETF, um, SPY ETF Trust Fund, these money that was pulled in is shared in some way between these companies. So 3M, even though the company could be doing terrible, they're still being invested in a large, um, you know, um, in a pretty good portion from this trust fund, right? As an example,
Yeah.
yeah, and so that's that could cause the underlying bubble in the market due to these funds. It's a re it's a cycle of prices going up, people buy more, prices going up, people buy more, but there underneath it there are actually companies that are not doing well in the slew of money, slew
And
of
you
companies.
had showed 3M there, but I wouldn't pick 3M as a company that was not doing well. I think
Okay.
they were doing just fine, but their price, their stock price, again, stock market, stock prices, not necessarily representative of the underlying health of any company or the economy. That it's just what people are willing to pay for some piece of that company. And sometimes companies and or the stock market are hated, and
Right.
the price people are willing to pay into it is really low, and that's where the difference from investors and speculators. That's where investors look and they find valuable opportunities and then look to acquire positions in companies that are very strong, have a lot of value, and are currently undervalued. You know?
Hmm.
Or at least that's the way that I like to go about it because of
Yeah.
the intelligent investor and my trying to do my best Warren Buffett and Benjamin Graham impression.
Yeah. So I don't know. I speculated that this was gonna happen regardless of the virus or not. We just didn't know when it was coming. If my guess, if the virus wasn't there in the world, my guess would have been probably the end of this year or the beginning of next year was when things started to slow down and head south. I think Trump would have done anything possible to keep the economy at its peak during the election time. So
Mm-hmm.
he has, well, he has shown a lot of tools that could keep the economy up, and I bet there was even more to sustain that. So that's just my opinion. Yeah. Economy is the strongest indicator whether you're going to be the next president or not. And also, the second is the war. If you're in a war, almost you're almost likely that you're going to be the continuing president. The the history tells us. So
Yeah.
yeah. Um.
And again, the
Yeah.
economy being different than the stock market. Stock market's just a tool that likes to take a mind of its own, and it doesn't represent the underlying health of the economy. I think a lot of the things that we did, some things helped the economy, some things were hurting the economy, and we were putting ourselves in a position based off of debt that was being accumulated in a lot of different places in the economy and the high valuations we were putting on things like the stock market
Hmm.
were lining us up for a scenario that wasn't going to have a good ending. And this just, yeah, like you were saying, you were anticipating a little bit later on, but this just did uh, what was inevitably going to happen, which was pop pop the bubble
All
that
right.
exists in a
Yep.
lot of different things.
So to end this conversation, I think maybe some prediction, your guesses in maybe
Hmm.
a month or two, or maybe 6 months. Yeah, the trends. Okay, the
So
derivatives.
if you zoom back in, because this isn't going to help us, we're in unprecedented territory. We're the trying to use any kind of historical perspective on where we're at with the economy and economies around the world and the stock market valuation and where it was at. It is helpful from just trying to learn how we got to this point, looking at the stock market price, that long view.
Hmm.
It's only good from like a just knowing how we got here. Not useful in trying to compare this
To anything
situation to
else?
any other situation,
Yeah,
right?
yeah,
It's That's a really tough one.
yeah.
Monetary policy is completely different. We've basically thrown out pretty pretty much any way that we used to handle recessions and downturns
Yeah.
the way that we used to in the past.
Mm-hmm.
It's pretty much all gone.
Mm-hmm.
We're in completely new territory with the huge injections of stimulus that we will see
Yeah.
and not having anybody work.
So
So
you're saying even Michael Burry or Steve Eisman, who are the people predicted systematic failure in
Steve
2008?
Eisman,
Yeah.
like like the Red Wing, great. Think you gotta be talking about somebody else.
Yeah. This guy. It was Mark
That's a
Baum in the
different
movie. Um.
Eisman.
Yeah.
Eisman.
Yeah.
Yeah,
He
not
he he was he was
Eisman.
portrayed as Mark Baum in the movie Big Short. Anyway, these
Gotcha.
people predicted 2008 crisis because it was predictable. There was a systematic failure, and it's eventually the whole housing market was going to fail. They predicted that. This is something different.
Yeah, they were able to see the one event that could could start to unravel the economy
Domino
at that
effect.
time.
Right.
Yeah. Nobody knew what it was going to be. Coronavirus ended up being the thing that did it this time.
Mm-hmm.
Uh, but there's still plenty of things that have yet to unravel. Right. This popped the bubble, and now we're going to be dealing with the repercussions of this for some time. I don't know how long that's going to be. We already said we're not going to worry too much about the length of time, but we're going to have situations likely where there's a huge supply glut of some stuff, uh, some products that are available in the economy, but people aren't going to want to buy them or aren't
Mm-hmm.
able to buy them, except for when stimulus arrives, and maybe that runs out. But you'll see huge deflationary pressures in the short term on a lot of stuff because there's going to be goods out there and services out there, but nobody's going to be going out to buy them or to get them.
Yeah.
At least in the time that people are on lockdown or the time that people's personal financial situation is in trouble. Like people are scared; they don't know what's going to happen with their ability to be employed in the future or their ability to have income in the future. Like all of that's in question for the vast majority of Americans.
Mm-hmm.
They're scared, and so you're going to see lots of declines in demand for certain things. Stimulus will help with at least the bare necessities and some of those things, but from like bringing the economy back and as far as finding demand for businesses that existed prior to shutting everything down, nobody knows if that demand's going to return or at least return in the strength that it was before.
Yeah.
And then how do you necessarily gauge if you're going to have a profitable business depending on what it is, because you can't gauge if that demand's there. Like that's going to be a very difficult thing as we start to remove certain restrictions on lockdowns and allow some of the return to business in whatever phased approach or however it happens. So
Mm-hmm.
that's going to be very difficult to kind of predict. From what's going to happen in the stock market, I think you're gonna see it go much lower
Much lower.
before it actually has some recovery. Now it'll start to recover before the economy starts to really recover. So it'll probably find its low
Mm-hmm.
before we kind of hit the broader economy
Just
bottom.
like the housing market that we talked about earlier.
Yeah, but again, that's that, and it's probably not healthy to try to compare it, right?
No.
But that seems to be the thing that happens, and maybe it's not useful to try to look at what's happened in the past and predict it. But some things you can imagine, like this rebound that we're seeing right now,
Mm-hmm.
that seems like it's just a rebound. People are buying.
Literally.
So, like,
Why does this happen?
this is why I'm telling you that it's just a rebound, because nobody can tell anyone with any amount of certainty what 2 weeks looks like or what 2 months looks like at this point, from how many businesses, the
Mm-hmm.
impact on businesses, the rollout of stimulus, the lack of stimulus. demand for certain things in the economy, the ability for people to have financial security, to then be able to be, go spend their money. Nobody can even come close to predicting what's going to happen. So you're going to see that go right back down because while people are sitting around for the next couple of weeks waiting for stimulus and
Yeah.
businesses are laying off more people because it's going to continue to, layoffs and unemployment numbers are just going to be larger and larger
Yeah.
every day for uh, at least the next couple of weeks until we see what's going to happen, and
Hmm.
probably longer.
Yeah.
So this rebound doesn't necessarily make any sense. It seems
Yeah,
like
I
hope,
agree.
a hopeful rebound,
A lot of people would agree with that.
and it
Yeah.
will likely go much lower. Then there's also, so this is something that you left some moving averages and stuff in there. This is
Hmm.
something that I don't care much for, but people will tend to make this a self-fulfilling prophecy. People look at trend lines. People love to look
Charts.
for patterns and
Yes.
charts. People love to look for it.
Yep.
I I like to look at what the underlying, things are that are in
Yes.
an economy, but I can't discount that psychologically people are going to
Do your irrational things,
make
right?
decisions based off of charts and patterns. They're
Hmm.
going to make decisions based off of what they see. That is human nature. And so there's certain things like Fibonacci based numbers and ratios with the stock market. So I think we came close to testing one with the S&P. We tested it maybe with the Dow Jones, and people saw that as a buying point. That was like it's roughly a third decline from top to bottom, and they see that as the point of a bottom and then a recovery. And
Hmm.
at least, if anything, even if they don't think that this is the recovery, they knew that that was the time to get in, and then they're going to find the time to get out based off of some other human psychological factor Fibonacci numbers. They're going to start getting out, and you're going to see all of the retail investors, the me's and you's that are just like, oh, now's the time to buy. It's to buy the dip mantra. I'm getting in. That's right. That's what we're supposed to do.
Yeah.
Uh, the fear of missing out, trying to start to nibble in their positions,
Hmm.
and they're going to get left out to dry uh, while the stock market goes into a further decline, and it's not going to go just down to the bottom. It might go down to the bottom, have another little bounce off of it, but some point in time after that, it's going to break through that and just keep going down. And then
Yeah.
we ended up going 30%, I think, roughly from top to this lowest point
This
on this
lowest point
chart.
on, yep, that is
You're
30%
probably going to
approximately.
see it.
33%, it says, yep.
You're probably going to see it do the same amount down again. So maybe
From
it's
this
like
point,
60%.
yeah.
I don't know. Again, I think that these are the psychological factors. People will play into that story. Once it goes
Yes.
beyond a certain support level, they're all going to be like, well, now it goes down to the next support level. And
There's no such thing as support level. Unless you're
it'll
looking at Bitcoin.
and maybe I shouldn't be necessarily talking about support
Yeah,
level.
right.
That's just a
No, no,
term,
I
right?
know. Yeah,
But
it's
like
just a term. That's what I'm saying. At a
some
crisis like this.
predetermined value from, ratio from the original value,
Hmm. Right.
and then it'll probably stop, and maybe by then things actually have happened where there's some recovery uh, from an actual real economy standpoint, and
Yeah.
then maybe the stock market starts recovering in value from there. So I would
Yeah.
I would just wait. If you feel like you can't wait, I would just nibble. But I
Hmm.
think that this is
Nibble as
not
in,
just take small positions in
yeah.
companies or ETFs that you like.
Hmm.
So, and I could be completely wrong, but because nobody can tell me anything about what the future looks like,
That's
like
why we were
even
doing
remotely
this.
close, even remotely close, I would say preserve your capital, preserve your cash.
Hmm.
Have cash available for
Yeah.
the purpose of deploying it strategically in the future,
Yeah.
buying things that produce great value opportunities.
Yeah. Well, we have like 5 minutes left. Do you think I'm just gonna ask you this straight up. Do you think gold has decoupled from the stock market now?
Decoupled. All right. So all I'll say is so gold is another asset that is historically a wealth preservation you know vehicle, and it's a currency. People have used gold and silver and different precious metals for the purpose of as currency, as the actual thing that's being used to exchange for goods and
Mm-hmm.
services by itself. Now we don't have that anymore. We have fiat currency. We have federal notes of debt that are our dollar bills. They say Federal Reserve note. It's an IOU. It's saying trust in this piece of paper
Yeah.
that isn't backed by anything other uh, than than faith and good faith in the stability of the economy, which
Mm-hmm.
is at this point, you know, it the confidence is declining in what the relative strength and survivability of the economy is based off of what's going on, and without any ability to predict, you know, what uh, with any certainty what's going to happen in the future. So I would
Yeah.
say gold is something that will have its own price fluctuations from this point, and a lot of it's going to be tied to what's going on with our monetary policy. And I don't think it ever has like a certain coupling with the stock market. I think
Mm-hmm.
it tends to rise above whatever inflation is, and so just like the stock market tends to rise above whatever inflation is, because you have businesses that are making money, so that's they're incentivized and almost engineered because inflation exists to be able to make profit and
Yeah.
rise above inflation. uh, Gold, I think, is just one of those things that rises above inflation and maybe slightly above inflation and preserves purchasing power and preserves wealth.
Yeah.
And I think with massive amounts of stimulus after we have this period of deflation, maybe in certain goods and commodities we see deflation,
Mm-hmm.
maybe in gold we don't see any deflation because there's high demand that's going to be for it because of the amount of fear and uncertainty.
Yeah.
And just with the massive amounts of injections by central banks around the world, that's a lowering in confidence maybe in that country's economic system, and a lowering in confidence in that country's currency, which again is paper notes of debt aren't aren't backed by physical bullion or anything other than faith in that economy and that government.
Mm-hmm.
So I think you could see very large increases in things that people find more secure as a safe haven like gold and
Yeah.
silver. And for the decline that you recently saw with gold and silver, a lot
Yeah.
of that is so people would wonder, when the economy tanked, why wouldn't those just go straight up?
Yeah.
Because gold and silver they're tied into a lot of ETFs, and just people who were owning it as a hedge anyway. People were liquidating really any assets that they could
Yeah.
to be able to preserve cash, because even though cash is just fiat currency that's not based in anything, it's still the thing that's currently used to buy other assets. People want to have it so that way they can
Exactly.
purchase other things,
Mm-hmm.
and or they need it to pay for positions where they were margined. So all the margin calls, people had to liquidate a lot of things, a lot of assets that they had, including gold and including silver and pretty much anything else. And that's why you just saw everything decline. Some things declining less than others, but people were selling everything to
Yeah.
raise cash to be able to service other obligations that they had.
Yeah. I didn't
And
know
now
that.
I think we'll be in a scenario where gold will probably perform pretty well. at least, if not in the near term,
Hmm.
probably in the next couple years, it'll probably do quite well. Is definitely a safe asset, I would say, is that will always have demand, especially in the face of uncertainty.
Yeah.
Now, you're not necessarily gonna make a killing on gold, but at
Because
least
it's an
because
increase. You could see an
because
increase.
yeah, but
Yeah.
gold. So like the argument is gold doesn't produce any value, right? It
Right.
is an asset. It has a finite, uh, it's finite, and there's a limited amount of it.
Hmm.
But it doesn't, gold doesn't go and build a business for you and produce things that go into the economy, right? That's
Right.
why people invest in businesses, and businesses produce things and generate more value into a society. And that's why the
Right.
stock markets outperform gold.
Yeah.
But gold
At a
is
time like
definitely a
this.
good, gold does better than currency, other currencies, because currencies get devalued when money is generated and injected
Yeah.
into an economy,
Something that
money
human can
supply.
control. The
Right. Yeah.
government
It's
can
something that
control.
can be that can be manipulated
Manipulated.
for
Yep.
the purpose of the health of the economy,
Exactly. Yep.
um, where gold is finite and it
Yeah.
preserves some value.
So, do you remember like when you and I went to Korea, winter of 2016, was it? I think it was,
Yeah.
right? Yeah, right before I went
Yeah.
to Champagne to
Was it?
study.
Yeah.
Um,
It was December
yeah,
2016, January 2017. Right?
yeah.
Yeah.
So even those guys, I said we're gonna make this video and post it. Those guys that you met, my friends
Oh
from
man.
Korea, those guys were interested. They were super interested in listening to this. So
Nice.
say hi to them.
But let's hope that we don't sound like a bunch of idiots. Yeah.
No, I don't think so. It's you have to be dedicated to study things like this. You have to be super engaged, super interested. Otherwise, you
You,
kind of
you have
see.
to watch about ten YouTube videos on each topic and then figure out what the hell's going on and
Yeah,
compare all of the things,
yeah,
then read a bunch of articles and
yeah,
then still not know what's going on,
yeah,
and then slowly sift out things that make sense or don't make sense.
yeah. The hardest thing about this, investment is there are a lot of languages, equations, and you know some metrics that is trying to predict human behavior. It's just like
Mm,
it's just impossible things to do in general, and so there's a lot of things to learn, a lot of vocabularies that you have to pick up, and a lot of, in a way, like betting schemes that you can do in a stock market. It's
yeah,
just, yeah, it's deep. And it's designed, well, it's designed that way so that the investors, the pro investors, stand out. You know, so if you actually wanted to get into this deeper and deeper, you actually, unfortunately, have to study a lot.
yeah. But that's like anything,
Yeah,
to
it's like
get
anything.
to get more than just a surface level of knowledge. And you realize when you start having conversations with people at work around the water cooler, what level of depth you've been going into compared to what level of depth they might have been going into.
Yeah.
And you're able to vet different things that you
Uh,
had. You at least throw it out there.
yeah.
They can tell you that you're crazy or you sound crazy, and then
Yeah.
you go reevaluate whatever it was that you were looking at. But you'll see a lot of people might just only have time to kind of absorb, one video on a topic or
Hmm.
a little bit of reading, read a Wikipedia page and be
Yeah.
like, all right, I think I got a handle on it. But there's always, like with anything, there's usually a lot of layers
Yeah.
uh, to how things work.
Yeah, the pro investors actually invest. I don't think they invest more than 10 companies. So like it takes that much time to study each company's their fundamentals, their cash positions, their
Hmm.
revenues, profits, who are the customers, how are the customers responding, like studying all these future aspect of the company takes a long time. And when you at the end of it, when you realize something, that's when the pro um investors benefit.
Yeah,
Yeah,
yeah, and invest in what you know. That makes
exactly.
exactly
Yeah.
uh,
You know,
plenty of
you
sense.
don't just go to a casino. I mean, people do, but you don't just go. You're not gonna win money just walking into a casino, sitting on a blackjack table, and randomly hit or stay and win money because the game is not designed that way. And it's same thing here. Basically, I'll probably cut that part out, but
Not an endorsement for hitting the casino and long term wealth generation. Yeah.
all right. Well, you can say bye. I'm gonna end the recording, so you can say bye if you want.
All right. Thanks for having me in so we can talk about this.
Yeah,
We'll
it's
be doing a
fun.
lot more of it.
Yeah, I
Oh
had
yeah.
a lot of fun. Yeah.
We're gonna hit a lot of different topics in the
Yes,
future, I'm sure. It'll be good.
it'd be good. All right, thanks for watching, guys and gals. I'll see you in the next video, in our next conversation. If you like the video, please hit like below, and if you would like to see the next video, please hit subscribe. Thanks.